Ready to start with our panel discussion. This is the second panel discussion, and this is on embracing sustainability development and reporting. Now, stocks regulator SEBI mandates that the top 1,000 listed companies file detailed sustainability reports like the BRSR. Like Preeti ma'am mentioned earlier in the day, there are several incentives for Indian companies to adopt sustainability reporting voluntarily beyond what the SEBI mandates. By adopting sustainability reporting, companies can attract ESG focused institutional investors. Demonstrating leadership in sustainability can provide a competitive edge, particularly in industries where customers value ethical and sustainable practices. Demonstrating alignment with national, societal, and environmental goals also reinforces a company's role as a responsible corporate citizen. So, there are many benefits of ESG reporting, but there were some questions raised that this is something that larger companies are doing. What about smaller companies? What is the way forward for them? There'll be lots of these issues that will be discussed in this panel discussion. Please welcome on stage our speakers for this session. Please welcome Mr. Narayanan Vedanathan, Head of Policy Development, ACCA. He will be moderating this discussion. Please give him a round of applause and welcome him on stage. Please welcome Dr. Rajendra P. Srivastav, Emeritus Professor, University of Kansas, USA. Please give him a round of applause. Please welcome CA Dr. Avinash Chandar, member, International Taxonomy Consultative Group, ITCG of the IASP and IISP, and former Technical Director, ICAI. Please welcome on stage Mr. Gaurav Sarup, Head and Director, ESG, Carbon and Social Performance, Vedanta Resources. And please welcome Ms. Namrata Rana, Partner and National Head for ESG, KPMG in India. Please give a round of applause to our speakers and welcome them on stage. I'll hand it over to Mr. Vaidyanathan to steer this discussion.
Good afternoon. Welcome back. And it's a real pleasure for me to welcome you and indeed all of our distinguished panelists for this really interesting and hopefully what you'll find thought-provoking discussion. My name's Narayanan, and I will be the moderator for this conversation. So I want to give as much time as possible for our panelists to share their views, but if you'll indulge me, I'll just take 5 minutes right at the start to set the scene a little bit. I'm head of policy development at ACCA, which is the Association of Chartered Certified Accountants. We train accountancy and finance professionals, and therefore we are very interested in this space, and we think it's really essential that the accountancy and finance community understands the importance of areas around sustainability and its reporting. As countries work towards their net zero targets, this whole space has gained a lot of impetus. And there's also the reality of technology overlapping with sustainability, with technology tools being used in this space. And we'll come on to some of that as well in our discussion comments. From ACCA's perspective, I guess, we see building the ecosystem here in this area along multiple dimensions. One, I think, is around generating research and insights. We try to link in with our member network and our partners, and we use that to inform our thinking. You can find all of that on the internet if that's of interest to, for example, papers on sustainability reporting as a guide to preparation and what our views are. In general, as a global body, we support global standards where possible and harmonization as much as possible, recognizing, of course, certain geopolitical and other realities. But that's generally speaking our starting point. I think it's worth saying that the second major pillar. And just to that point on global standards, um, as a result, when we think about, and without wishing to get into too much detail in these initial comments, but in terms of the ISSP standards, IFRS S1 and S2 and so forth, those are often areas that form the pillars of our starting point to the discussion on sustainability reporting. The second major pillar, I guess, for us is around education and training. We think ultimately that it's in the benefit of the ecosystem to understand and to be aware. The more knowledge there is, the more awareness there is, the better it is for everyone, and the better it is for um, those preparing statements and those using statements on both sides of the fence. And again, there, along with partners, we seek to develop courses. We have recently put out a professional diploma in sustainability that covers some of the areas that we might be talking about in this discussion. And again, my overall point here, I think, is that it's a very vast space. We have various different modules around reporting, climate finance, and others. So what that really demonstrates is it's fast evolving and it's quite a vast space as well. And therefore, keeping up with everything that's happening, I think, is one of the most important things in this whole area. And thirdly and finally, from my side, I'd say we seek to support the ecosystem really through, as I said, development and deployment of global standards and frameworks. We do engage with the International Sustainability Standards Board, both from an education point of view and from the point of view of seeking to share our perspectives with them and what evidence we have from anything we do to influence their thinking. We continue to engage here in India as well, of course. For example, recently with the NFRA over here in relation to their request for comments on the proposal to revise SA 600, for example. So I think overall it's a multi-pronged approach to try and ensure that um, we can contribute and discuss, and forums like this and discussions like this are all part of that process of helping to share views and helping to collectively increase all of our understanding of what's going on in this space. So I'll park it there. And as I said, I do want to give as much time as possible to the great list of speakers and panelists that we have. We'll go sequentially to start with for some initial comments, and then we can take it from there. We probably open it up a little bit for people to respond to each other's comments if they'd like to. And I'd also like to leave a little bit of time at the end for questions from all of you. So with that starting point, and when I request each of you to share your comments, it'd be really helpful if you could take just a minute, no more than that, very quickly on what your connection is with this space so people have a little bit of context on where you're coming from, which I suspect you might have done anyway. So, Dr. Srivastava, if I could request you, please, to kick us off.
Well, good afternoon. Thank you very much, Mr. Narayanan Viswanathan, and to all our panel members here. I really thank SHM for inviting me here. In particular, Santoshji, where is he? I am here visiting from United States. There is a program with the University Grants Commission that provides funding to universities to invite some distinguished scholar from outside to share their knowledge with the local faculty and PhD students. So I am in that program here. I was here in April visiting University of Delhi for a month. This is the second time. So the program allows you or wants you to come 2 times. So it is really a good opportunity for me to share my uh, knowledge, experience, and research with this group, which is very unique. And the topic is very close to my heart. Responsible corporate governance and sustainability reporting. Uh, in this area, I have worked for a long time as an accountant, but you see my background, I'm a very strange individual. I got a PhD in physics, quantum physics, that too. I was assistant professor in Pilani, BITS Pilani. That was the high time of Pilani. We had collaboration with MIT. I was just young assistant professor, but I had the urge to get PhD in quantum physics from US. Opportunity came, went there, got my PhD. I was very excited working on quantum theory for 7, 8 years. Then I got into company of all these business professors in Canada. They were all engineers from India. Some was teaching finance, some marketing, some management science, but no one in accounting. And that company somehow encouraged me. In fact, sometimes looks like pestered me. So it took 3 years for them to convince me that I should maybe look for more opportunity. I went back to school, got a PhD in accounting. 3 years it took from ABC to defending my dissertation. So when I came to accounting, I decided to research in auditing and teach auditing. Now you believe now that a physicist with not a single day of audit wants to teach auditing and wants to do research. It so happens when you come from outside, you see the things differently. And so when I started teaching auditing to undergraduate class, everything I read, I want to question why and how. And that really was the starting point. I published some hundreds of papers, more than 100 papers. They are very basic. Fortunately, there was the colleague that I wanted to work with. I don't know how many of you are aware of this framework, Dempster Shafer theory of belief function. Shafer was my colleague. He got PhD from Princeton and developed a new framework of judgment making under uncertainty. And it is being used in AI. The first introduction was that this framework is so relevant to model uncertainty in the real world. So they're using in AI. I felt like it has really appealed into judgment making in audit. So while I was teaching auditing, learning auditing, and I worked with Glenn Schaefer, teaching him auditing, and he taught me the framework. And we published a lot of papers. And thanks to KPMG, they recognized the value and they funded 3 times in a big way, in a very competitive way. We also developed a software through their funding. Most recently, in 2017, they came back to me and said, well, I've already done with my research. They said, well, we would like you to submit a proposal to develop a theoretical framework for audit judgment. I said, well, it is my time to contribute to the profession if they want me to do it. So I did it. They funded and we published some work. So it is that whole framework is so relevant to the entire business process. And here is some, let's see. Look at the papers. I mean, talking about audit risk is the very fundamental thought process of planning the audit. When I taught it, I wanted to look at from the system side what they were doing and how they were doing. And I questioned a lot of very basic fundamental things. And the first paper was published in 92, which challenged the audit risk model. We published it. And now the AICP has changed their language. And I'm sure some of the international organizations will do it too. So information system security risk, fraud risk, audit information security. Anywhere the risk comes, this whole framework. And what it is evidential reasoning, reasoning with evidence. If you see here, sustainability reporting. I had a PhD student. She wanted to do her PhD. We encouraged her into, sustainability, early times. I mean, 2009, I published about the process and issues. So we have a lot of challenge at hand, especially dealing with sustainability. The know-how as an auditor, not simply that, the accounting know-how you have to have, but depends on what area. You are talking about the pollution, the air quality, the water quality, all kinds of things you have to know and test and validate. So here is just one evidential reasoning with evidence. And the audit process is very complex. So this provides a structure. This is just a network to show you. I don't know if it's not showing it. Did you see the other one? No? I'm sorry. I thought it was already showing. Hmm. We worked on it, it was working. Nobody questioned what I was talking about. I'm sorry, I'm looking at the screen. Okay. Now, I was wondering, nobody was questioning. So you can see PhD in physics and then PhD in accounting is a 10-year difference. Let's say, 10-year difference, 72 and 82. Yeah. So what I was talking about this, academic publications. So when I looked at the basic foundation, there are a lot of issues trying to understand. So one was the first paper was the challenge to the not only academics but also the practice. The audit risk model, some definitions they were saying and trying to model that using probability theory. And I said, well, it doesn't make sense. Probability theory is not able to map. And some of you may know audit risk, they say, well, inherently there is a problem, controls fail to detect the problem, and then you do the audit to find the problem. The language was just not appropriate to reflect what the auditor's thought process was. And that started my first work. And then in the fraud risk and systems risk and information quality and all that. Then sustainability. Again, it's a big structure, very complex system. You have different assertions, different made objective, evidence pertaining to single assertion, single objective, multiple objectives. So you as an auditor, you have the sixth sense to think about all that, how integrate, and I'm happy. But is there a structure? And that is what we provided. So this is just one example. I think I took the partner from one of the accounting firms, and this is audit of accounts receivable of a hospital, healthcare industry. And it's not easy. You can see all these different links. One piece of evidence supports multiple assertions, multiple, and you make a judgment. So judgment is yours, but the entire framework is a very well-founded mathematical theory based on the Dempster and Schaefer. Dempster was at Harvard. Schaefer got his PhD from Princeton and was my colleague. And so that really provided a lot of opportunity. Coming down to current topic, corporate governance. I think we have discussions, there's nothing new. But basically, the corporate governance, what it is, that is a mechanism to control, guide, and monitor business activities. Now, if you look at corporate governance, agency theory is the basic foundation. I mean, managers work for the owners, but the managers and owners somehow interest deviates. Manager wants to get their bonus maximum and report the information that they have done a great job. But should there be misstatement? Of course, there could possibility of misstatement because they want their bonus. So they will try to misrepresent if they didn't achieve the right thing. And so that is the foundation. Now, corporate governance, we are talking about the responsible, and I will mention about that in a moment. There are two different kinds of corporate governance. One component is internal, another is external. External, what is external? Well, regulation. The SEC or SEBI, that's the external agents to monitor the behavior. That's the corporate governance. All these regulations in US, we have right in the beginning, 1933 Act, and then you have Foreign Corrupt Practice Act, then you have PCOAB, Then you have Sarbanes-Oxley in 2002. Similar versions are in India too. Then internal, of course, is the board of directors. Then different committees: audit committee, compensation committee, risk committee. How often they meet? So this is the whole structure of corporate governance. Now take one dimension of that, and that is board of directors. What does it mean? Board has to be independent. Board has to be competent to be really aware of what is going on. And third means they have to actively monitor, participate, guide, and all that. All these regulations are based on these factors. Independence means how do you make board independent or audit committee independent? And there are some issues. Of course, competence in US it is required that at least one person should be on the audit committee with the financial expertise. If not, then they should disclose it. I don't know what is it in India. Is required in India too to have financial competence of at least one person? And activity, how often they meet? Now, independence, I think in India, it seems like even the board members could be the executives and their relatives. I don't know. But there it is required that they should be independent of the management. Now, the responsibility if I am the board, I'm supposed to monitor the activity, supervise, guide, and control. How the regulators will make sure that I am sincerely, ethically, really providing that guidance and control. And still, it is not there. As a board member, I should be held responsible if the management commits fraud. It's not only the management problem, but also the board of directors. And it is not there. If there is a commitment of fraud, should they be responsible? Should they be held liable? It is not. But the management is. If you commit fraud, is proven, then you go to jail or monetary, but not board. And still it is missing there. All this act, Sarbanes-Oxley Act, they have defined step by step what it means about the auditors, what it means to the management. In India, we have this 2013 Corporate Act that does the similar thing. Now, here is about the sustainability. United Nations has come up with this publication that has 17 different sustainable development goals. And there are, I think, 169 different targets. Think about now. This includes everything from poverty to education to well-being of the healthcare, water quality, air quality, you name it, everything inclusive that you can think of that makes this world sustainable. Now, all these different objectives, I'm not going to go through. The question is, how do we monitor it? Now, disclosing all this information is required in certain part of the world. In Europe, it is required. You disclose sustainability related activities you are involved in. In India, also it is required. And also audit is required in the European countries, and I think in India too, audit of sustainability reporting, CSR. In America, it is not required. It is voluntarily. And now the standard setters are setting that what should be disclosed and what should be required, but is still not audited. Do you know why? US is a litigious society. And that is what they think, that if somebody is misrepresenting something, misreporting, the legal system will take care. So it is not required. The same thing, even the XBRL. I think India was the first country to require XBRL format documents, but I don't know, they pulled it back because the expertise were not there. I was involved in XBRL research too in 2000 early when it just came in. So now, since I had a physics background, I was interested in technology. So in 1995, Jan is a professor in one of the colleges. So she took the technology and got the information from SEC site, all the companies, look at what company in terms of what industry they are and what they are disclosing under the sustainability reporting, What about there's a difference between one industry to another industry, what they provide. Then from country, because in US there are a lot of companies from outside like England, India, Canada, how their sustainability reporting, how their disclosure is changing from industry to industry. So it's very exciting. So I want to show you uh, text mining is a tool now in terms of a change of approach of research. You can count the words, you can count phrases. People have developed models that determines financial risk. Just looking at the financial disclosure of things, it is required in US. You disclose your business risk, and so counting how many times they repeat certain things, people have developed models and tested it, validated it. Financial risk, litigation risk, tax risk, other fraud risk, and all that. So it is being already developed. I want to show you some results. It's already there. We have implemented in the technology. These are different phrases that you can use to determine financial risk, like chapter 11, chapter 7. Those are bankruptcy filings. I don't know about the Indian context, but I'm encouraging the researchers that they should develop similar models for India. There are models being developed for sustainability reporting. How good, how green is certain company? What is it that determines that? That is being developed. Cyber security. How can you determine the risk associated with the company in terms of what they say in their report? Uh, Here is just how difficult the document is to read. Could this be intentional, like Satyam committed major fraud, Wipro, similar company, didn't commit fraud? This is the measure of difficulty of the report. More difficult to read and understand. Enron, I looked at Enron and Microsoft. Enron is more difficult. Enron committed fraud, the CEO. Here is change, how the reporting changed from year to year. There's a mathematical model called cosine theta, and it is being used in face recognition technology. So if you look at the year to year changes, the year they committed fraud, a big drop. So that predicts that there could be something there wrong. Why it is such a big change, fraudulent behavior. So one that let me take this for a second. I don't know if my system is working, but I will uh, definitely anybody interested. I can give you free access to it. This is the technology. Let's say I can. It takes only a few seconds to do it, but
While you're doing that, Dr. Srivastava,
okay,
first of all, thank you very much for sharing that. And I think
okay,
it's an interesting
good.
lens,
Thank you.
just to bear in mind the strength of the thinking and theoretical and academic underpinnings that sit underneath a lot of the sustainability reporting discussions that we're having. I wanted to very quickly, and we will come back to some of that as well in the discussion. I wanted to very quickly switch gears, if I can, to yourself on my left, Mr. Gaurav. Just in terms of when you think about it in the reality of organizations right now, how can strong corporate governance drive sustainability development, ESG outcomes? What does that actually look like? And what kind of checks and balances do you see working or not working?
Thanks for that question, Narayanan, and very interesting the kind of data mining that your software is doing. Um, Firstly, thanks to the ASOCAM team for inviting me here. So I'm part of the of Vedanta Limited. I head the ESG and sustainability function for the group. And so the subject of corporate governance and sustainability is something that we kind of live through on a day-to-day basis. I've been with the company for 10 years. I've been in this space since 2009. So I've done a lot of reporting in those 15 odd years as a professional in this space. So, for those of you who do not know Vedanta is one of the largest diversified natural resources companies in the world. Uh, our portfolio of metals include everything from zinc, lead, silver, aluminium, copper, iron ore, steel, oil and gas, um, we are in the power sector, and then we have some new metals, ferrochrome, nickel, cobalt, etc. Right. So um, we actually see ourselves as very well positioned for the energy transition economy that has emerged and will continue to grow over the next couple of decades. So from a sustainability reporting standpoint, from a disclosure standpoint, and rather from an overall sustainability and ESG strategy standpoint, let me tell you a little bit about my experience on this within Vedanta. And because we are so diversified, we essentially have multiple companies across the group. And when we sitting at the corporate team look at all of our companies, what we are trying to assess and govern is that are we being able to move with the same level of ambition and the same across our ESG and sustainability strategy, but also uh, incorporating all of the nuances and differences that our companies have. Now, we know that as a subject, sustainability has been driven from the top. So unless you have a mandate right from the chairman's office in our case, or from the board of directors and the CXO teams, very little things move across in this area. But there is always a slip between intention and action, right? And that's where corporate governance comes in. We've been in my experience working in the space for the last 15 years, what I've seen is that many companies, and Vedanta included, right, in the first phase of this is the early 2000s, mid 2000s, we put in the frameworks, we put in the policy, we put in some goals and targets, but we never actually saw any action and movement on the subject. And so when we kind of revisited what we wanted to do with sustainability and how we wanted to integrate the principles of the subject, as well as all of the risks and opportunities that this points the business towards, we did a lot of thinking on what do we do to take this intention and convert it into action. Which means that, and essentially, if I translate that, what this means is how do I get every function in my organization to understand their role in this very complex and dynamic structure, right? So E, S, and G, each are they have so many subjects underneath them that it's never going to be the responsibility of one individual or one department to drive through the ESG strategy of a business. After a lot of discussion, what we've emerged with, and this is, what I'm going to lay out in front of you is the overall governance framework that we've laid out at Vedanta. Um, in around 2020 and 2021, we kind of redid our entire sustainability strategy. We wanted to have ambition, but we also wanted to have the tools and management systems in place to deliver on that ambition. And so we're talking about things like getting to net zero by 2050, becoming water positive by 2030, increasing the number of women in our workforce, um, uh, in a decadal time period. Now, all of these are fairly standard in today's day and age when it comes to large companies. But I think what kind of differentiates where Vedanta is coming from is in many cases we are in like a hard to abate sector, especially when it comes to decarbonization. And our scale is humongous. So just to give you perspective, when I'm looking at getting to net zero, I'm talking about eliminating 65 million tons of greenhouse gas emissions over the next 30 years. I'm talking about getting 10 gigawatts of thermal power and turning that into green energy in that same time period. So the scale is huge, and I need to involve more than just the small sustainability team in order to make this happen. We've come up with a an organization structure called a community of practice, and the community of practice essentially has been built to engage internal subject matter experts. So there's a community practice on energy, there's a community of practice on water, on people, on supply chain, on community, etc., etc., etc. There are 14 such communities of practice, and these organizational bodies exist at the site level, at the sector level, and at the corporate level. The idea being that whatever ambition and drive that we aims that we have or strategy that we have gets driven through these bodies for the respective functions. So if we have a diversity goal, it's the people community of practice that make sure that the implementation of this happens across the board, right? So and so there's a top down approach, but there's also a bottom up response. There's a lot of learning that comes during implementation which gets taken up as uh, as we move up the hierarchy chain of the COP, right? So this is a very, very dynamic body, and we've seen some tremendous results as a result of uh, getting activating individuals across the organization. The most tangible one is it's converted my team of 10 people in corporate and turned it into a team of 1,000 plus individuals across the organization working on sustainability and ESG. Um, but it's not just enough to have subject matter experts, right? So you need bodies that are able to monitor and govern what's happening within this body. So in Vedanta, we have our mancoms, and we have function specific mancoms. So have an HSE mancom or an ESG mancom. Similarly, the HR will have its own mancom, finance will have its own mancom. And these mancoms are essentially where the corporate community of practice head sits. So anything that gets decided is also communicated to the larger functional body so that the implementation of this is spread across the organization. And then the mancoms report to the group exco, the respective business CXOs, as well as the board, right? So collectively, what we've been able to do is create a structure within the organization that allows for a seamless movement of uh, strategies, aims, targets, and action. And at the end of the day, that's what you want to report, right? So rather than looking at it the other way, I have a report to make, so let's figure out where the data exists. We've kind of turned it around now in the second phase of this journey that Vedanta has taken and said, let's figure out the strategy, let's get the organization structure in place, and then once the actual action starts to happen on the ground, you see that actually get implemented in our reporting side. Underlying all of this, the lubricant to all of this is actually data. Right? Without good data, it's impossible actually to make any of this move. How many times are we going to just talk about what the target is, right? I need to know what's happening on a weekly basis, on a monthly basis, on an annual basis. And so we've taken the hundreds of Excel sheets that existed uh, prior to a few years ago and converted that into a digital platform. And that really has turned things around for us at the decision making level, right? So when I'm governing what's happening at Hindustan Zinc or what's happening at the aluminium business, I have real data to kind of question them. And this real data is also present to the CXOs, it's present to the chairman. So anytime we're having the conversation, it's no longer just an open ended conversation. We know what the baseline was, we know where we are today, and we know where we are needed to be headed. So essentially, now what we've been able to do from a governance standpoint is have almost real time data, back that up with, uh, you know, make that data sit within the strategy that the business had set for itself. That strategy then feeds into the annual budgetary plans that we have. So, given the fact that sustainability goals are long term in nature, we've been able to break those down into annualized goals and then set annualized budgets for it. And all of that is monitored by the governance mechanisms I just talked about, right? So, a combination of all of this has really helped us deliver. Um, Not to say that it doesn't have its cracks, but it's helped us move in a much more unified manner towards a subject or a series of subject and topic areas which traditionally were relegated to one team in the organization. Now I can very easily say that sustainability actually is now everybody's business in Vedanta, and the right management teams are working on. So I'll end it here and then we can take questions.
Thank you so much. That's really helpful, and I think it really brings it to life because it's one thing to talk about it, but it's really helpful to see what the art of the possible is in terms of what's actually happened already. I want to actually just build on your comments and come to you, Ms. Namrata, if I may, because when we think about practical roadmaps and some of what you described links to that, when you look across organizations, what do you see as steps that organizations can follow? Actually, what's your response or reaction to the steps either? I think would also be interesting to hear. And just generally, what kind of checks and balances from a practical roadmap point of view? So,
Thanks so much. So, many years back, there was a lot of discussion on what's the role of business. So, Adam Smith basically said the role of business is to make profits. The role of business is business. But when we started facing the brunt of climate change, when we started seeing the social inequalities, the role of business has been questioned many times over. So Professor here talked about, quantum physics, and in quantum physics, you exist and don't exist. The same matter can exist and not exist. So, people have been saying climate change exists. At the same time, enough people have also been saying climate change doesn't exist. So business has also been doing that. They've been saying that in some parts of the world, why do we actually need to look at ESG? The purpose of business is pure profit. But here on stage, we have an example of an organization which is saying that the purpose of business is actually to build trust. So, environmental metrics, social metrics, governance, all that coalesces into a combined thing where you say that the business exists for people to believe that you are good for them and the planet. Uh, and in the framework that Gaurav talked about right now, he talked about three very critical things that to implement ESG, no matter what the kind of regulations all across the world, you need people first. You need them to actually believe that the purpose of business exists to do much more and to drive that from the bottom up, which also means that we need to drive new skills in the teams that we have. The energy transition is not just a transition of fuels, it's a transition of people, it's a transition of skills. Unless people have skills to move from a petrol diesel economy, they will not be able to transition into an economy that is based on renewables, hydrogen, and many, many other things. We are now in a world where two critical things are constantly being talked about: AI and climate change. And both of them intersect with each other and they impact people. So, people, process, and technology are the three tenets on the basis of which uh, the new world order is going to actually get established. We are talking about geopolitical situations, we are talking about regulations, all that is in the external environment. But how are organizations navigating this? And that's really the question that we need to ask in forums like this, that what does corporate governance mean to you? What does building trust mean to you as an organization? And where are the people? Where are the processes? Where are the technologies that will enable that? For us at KPMG, it's a very important question. And ESG actually is a watermark to all practices within the organization. So I represent the ESG team within KPMG, but ESG is also across. So when Gaurav said that there are multiple teams in Vedanta working on ESG, the same is the case with KPMG as well, because ESG is not something that will be driven by the top. Targets will be set. It's bottom up belief that will actually drive scale and access. Thanks.
thank you very much. Really helpful. And I think this is really highlights the cross-cutting nature of this whole space where you need both the technical depth, as we've heard in some earlier contributions, to understand what's happening and whether we're doing the right things conceptually, but then also the breadth of really propagating it across the organization to actually make something happen. I wanted to almost combine both of those, if I may, and come now to Dr. Chander. Um, you're someone who's very familiar with reporting frameworks, and some of it is also work in progress in relation to integrated reporting. And there was an earlier reference also to the use of XBRL. How do you see tools like that moving the conversation forward, and how do you see that as part of the overall picture in this space?
Thank you very much. Um, at the outset, I thank ASSOCHAM for inviting and sharing uh, my views. And actually, my views will be for a change from the standard setters perspective. We have been talking about, you know, from the compliance perspective since morning. And there are valid concerns as far as compliance is concerned in terms of cost and in terms of benefits and in terms of the implementation challenges and all that. My role, I mean, at the outset, I would just like to mention a housekeeping announcement. That I'm a member of the International Taxonomy Consultative Group. So whatever I say are my personal views and not necessarily the views of the ITCG of the IFRS Foundation. And secondly, I am not a CA because if I claim to be CA tomorrow, the institute may file a case that I am misleading people. So these two housekeeping announcements apart. So the point which I want to make here is in terms of XBRL as the extensible business reporting language and its role in integrated reporting and sustainability reporting. Just briefly, what XBRL does is it converts the paper-based reporting into machine readable format so that the information which is produced in that machine readable format can be accessed by different softwares for the purpose of analysis, comparisons, and other manipulations which are useful for the purpose of data analysts for by the regulators and other stakeholders. And in XBRL, the means which are adopted for converting the information, the paper-based information into machine-readable formats is in terms of creation of taxonomies. Simply speaking, for example, if we take the example of, let's say, the financial terminology, we have total assets, and in total assets, we have non-current assets, we have current assets. Within current assets, we have inventories, receivables, and cash, etc. So these terms, which are the financial terms, these are converted into taxonomy by means of tags. And these tags are used uh, by means of different softwares to convert into the machine readable language in the XML format. So this taxonomy becomes very important because that taxonomy is a standardized taxonomy uh, in terms of the architecture which has been laid down by XBRL International and then the accounting standard setters from the financial reporting purposes so that they are compliant with the relevant accounting standards. For example, in India, we have two types of taxonomies. Actually, Professor also mentioned that in India, we implemented the XBRL digital financial reporting way back in 2011. And at that time, there two different technologies were developed. One for the companies which are complying with the accounting standard as per the accounting standard setting accounting standard rules 2006, and then the Ind AS taxonomy, which is compliant with the IFRS taxonomy uh, of the IFRS taxonomy, so that those companies which are compliant with Ind AS, they can convert their financial reports the uh, into the XBRL digital reports to be filed with the MCA. Now, MCA in the beginning, you know, the has been, you know, updating these taxonomies because, as I mentioned, the XBRL reporting depends upon the accounting standards because the reporting has to be done in accordance with the accounting standards. So the when the accounting standards undergo a change, therefore the taxonomy it also has to be updated. So the MCA in the beginning had been every year being updating these taxonomies till 2016 and 2016-17. However, there had been unfortunately, although the XBRL India, which is a jurisdiction of XBRL International, I am a part of XBRL India also. So every year we have been sending the updated taxonomy to the MCA, but for one reason or the other, the taxonomy has not been updated. And the companies which are required to file with the MCA, the XBRL compliant financial reports after 2016-17, even though there have been a number of important changes in the Ind AS. For example, Ind AS 116 on leases has come. A number of amendments have been made in the Ind AS compliant with the IFRS, but the taxonomy unfortunately has not been updated. So therefore, the reports which are being currently filed with the MCA by the companies, they would also, even though the paper-based reports will be compliant with the current Ind AS, which are compliant with IFRS, but the XBRL financial reports, the XBRL digital reports, they would not be in accordance with the paper-based reports. So therefore, the information which is being generated by the XBRL financial reports will not provide meaningful data for the purpose of analysis, and it will be, I think, it is a kind of a you can say a rubbish which is being filed with the MCA platform right now. Now, why I'm saying this is in terms of the taxonomy, the importance of taxonomy development from the financial reporting purposes. Now, coming to integrated reporting, the integrated reporting is a comprehensive reporting where a company, apart from the financial results, has also to report in an interconnected manner with the ESG, with the sustainability, with the governance, and all those requirements with in terms of value creation, value preservation, value erosion also in some cases. So the integrated report is an overall report which has to be, which an entity has to report in terms of the overall performance goals, overall value creation goals, and all that, and the financial reports being just a part of that. Now, the integrated reporting framework, actually, it was developed earlier by International Integrated Reporting Council, IIRC, and recently it has been taken over by the IASB, the IFRS Foundation, since 2022. So therefore, now the integrated reporting framework is being maintained by the IFRS Foundation. So now the question arises that how do the taxonomies get developed for the IFRS, for the IR framework, that is the integrated reporting framework, which is a very broad framework comprising about 60 pages as such, and it deals with the very broad issues like governance, strategies, risks and opportunities, and other broad requirements. So for that, since the integrated reporting framework is with the IFRS Foundation, now what the IFRS Foundation has now committed that the integrated reporting framework, although it is not presently amenable to the development for taxonomies, but the IASB and the International Standards Sustainability Standard Setter Board, that is the IASB, will uh, implement the IR framework through the IFRS wherever possible through their different projects and the ISSB, that is the sustainability standards. And as it has been reported in the morning also, the ISSB has two standards right now, that is S1 and S2. One is on the general requirements of sustainability related financial information, and the second S2 is on climate related disclosures. Now, it has been mentioned, that these sustainability standards, they provide specificity or granularity to the principles which are there in the integrated reporting. For example, at the IASB website, there is you can say there is a mapping tool which provides insight into how the integrated report framework, which is also on the IASB website, how it gets mapped on in terms of the S1 and S2. And it refers to, for example, let's say there is para 4.9 of integrated reporting framework, and there is on governance, and there is paragraph 27 in S1. So it gives a corresponding mapping of the different requirements under the integrated reporting framework and the different requirements of the standards, that is S1 and S2. That mapping tool is available on the IAS. So that mapping tool helps in you can say laying down different requirements in terms of uh, making a convergence of the S1, S2 with the integrated reporting framework. And the IFRS through ITCG, of which I am a member, they developed taxonomy for the IFRS, that is the IFRS accounting standards, and the taxonomy for the ISSB, that is for the sustainability related standards. The taxonomy is also developed. That taxonomy is also available on the IFRS Foundation website. So these taxonomies can be used throughout the world for the purpose of reporting, and then these, it has been mentioned that these S1 and S2, they are the sustainability related baseline standards, and therefore the jurisdictions like in India, for example, the BRSR, they can add on to those S1 and S2 in terms of their own requirement. Only thing is to be ensured is that when adding their own requirements, the S1, S2 requirements don't get obscured. So in terms of the interoperability, the exercise is going on even at the ITCG level. That, for example, in the CSRD in Europe and the European single reporting format, where in the Europe you have to file in accordance with the FPRL for the financial reporting, as well as the sustainability reporting, the interoperability of different taxonomies of ESRF and the ISSB developed taxonomy for the sustainability reporting. That exercise is being going on. And of course, talking about the future, I'll just be brief. The ITCG is thinking in terms of you know, you know, increasing the framework, the the improvements in the taxonomies, modeling in terms of the modeling exercise, whether from dimensions to line modeling, dimension modeling, and in terms of categorical introduction of elements, which improves the taxonomy as such. And in the last meeting only, we were discussing how this AI can promote the reporting through XBRL so that there are lesser errors in tagging when you prepare the digital format reports. And in terms of analysis also, where the different regulators, for example, if they want to see the compliance with the relevant sustainability reporting standards or the financial reporting standards, the AI can help therein also. So broadly, this is the framework under which the whole thing is being operated upon from that perspective.
Fantastic. Thank you so much. Some really important thoughts there, particularly around harmonization. It's an alphabet soup of lots of different standards, lots of different letters flying around everywhere. So I think there's something really important there around mapping and harmonization. And also, I think the use of technology. So much of sustainability and is non-financial, by definition, non-financial reporting, and some of that is not numbers. And I think the use of AI, large language models, their ability to understand text is something that can really be part of the solution here. So all really helpful. I'm conscious we're pretty much coming up to time. We've got less than 5 minutes, but I just did want to open it up a little bit to check maybe for one or two questions if there are any. Yes, please, sir. Yeah, one second. I think there's a mic coming to you.
In any fossil business, for net zero calculations, is scope 3 taken into consideration in India? And number two, now assurance has walked in. Now, whatever were the mm, emissions reported earlier, if they are to be corrected, what is the practice?
Thank you. Can I just check? Does anyone have any perspectives on that? Because I think this was originally intended for him who's left. But do any of you have any perspectives here you'd like to share?
So, for all companies, I think it's important to look at scope one, two, and three, whether mandated or not mandated. So, SEBI has walked back a little bit on scope three emissions of, value chain partners and so on and stuff like that. But I would still honestly urge most organizations now to start looking at scope three really closely, because that is where things really become very tricky. And this is not just for manufacturing companies, this is not just for trading companies, but even technology companies. Because while we may think that technology companies are green and they're not oil and gas companies, they are actually based on data servers where technology really rests. And that needs to be looked at as well. So I would suggest that irrespective of company size, mandate, the nature of industry, you should look at scope three if you aren't looking at it till now.
Thank you. Yes, please.
Hi, I'm Kriti. So my first question is with in terms of to Dr. Chandra. Uh, India, what are the barriers and enablers for India being a leader in ESG for developing nations? Because we always have references from developed countries like Europe, this happens, US, this happens, and we do see that India has a potential. So, what would be the barriers and enablers for India being that leader in coming years? And my second question would be in terms of AI. Do we see AI as a threat of like getting into a potential spiral of similar set of problems and similar set of solutions across the board because no new information is coming, whatever we are feeding. And since it's a new thing which is coming up, so whatever people are generating is AI generated, whatever people are analyzing would be AI generated. So how we can come out of that spiral, or what protections we have for that. Thank you.
Yeah, I'm not sure whether I will be competent to answer these questions as such. The point which I want to make is that insofar as the India uh, should be the leader in terms of driving the standards, uh, in terms of whether they are technology standards or other standards, I don't see any barrier as such. Uh, you know, Probably what I feel is that the uh, the issues which we have, uh, we are grappling with those issues we are on our own in our own jurisdiction, and therefore uh, we have been contributing. It's not that we are just following in terms of the other people. We have been contributing in terms of the financial reporting, because I come from the financial reporting background. So that much I can say, that in terms of financial reporting, India has been contributing in the development of the financial reporting standards. And in terms of the ESG also, there has been since ISSB also provides opportunities for consultative development of the standards, India has been contributing there also. So I don't think there is too much to say that there are certain barriers. Only thing I can say is that maybe the international standards are being developed elsewhere, and we have been contributing to the development of standards in those jurisdictions, I mean, to the international jurisdiction, where we have been able to contribute to 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 a large extent in to my knowledge. Then, secondly, with regard to AI, while AI has, I'm not an expert in AI as such, but at the same time, what is being discussed in terms of the application of artificial intelligence in all spheres uh, is to improve the capability of the existing technology, so that the existing technology is used in a more optimal manner. I also understand that there can be an overuse of artificial intelligence, and over dependence of artificial intelligence has to be taken care of. And in many cases, the artificial intelligence may also mislead. So, for example, just this chat GPT we use quite frequently. If I put some, let's say, some problem, accounting problem to chat GPT, that how do you treat financial guarantees? It gives me guidance. But at the end of that guidance, it tells me that you find out what are the current accounting standards. It doesn't give me the definitive answers. So there are going to be limitations of artificial intelligence, and it has to be used with a great amount of discretion by various standard setters. And actually, the role of AI in XBRL is only starting. I mean, it's only, in the last ITCG meeting, it was not even thrown to public, because all ITCG meetings can be viewed on the website. So it was not in the public meeting that whatever we discussed about AI application in XBRL. But the point which I'm trying to make is that the the AI provides additional features which can be used to improve the XBRL uh, taxonomy, so that, for example, in developing, say, formulas, different formula link pairs and things like that. So therefore, I understand the concern about AI, not to be overused, but at the same time to be used with discretion. I don't know whether I have answered question which was.
So politicians answer. No, but thank you very much. Really helpful. I'm conscious we've just about run out of time, so I'm afraid we'll have to draw it to a close there. But please do feel free to get in touch with all of our panelists if you'd like to discuss or have any further questions. And thank you very much for your time and for your attention. Thank you.
Assistant Secretary General ASSOCHAM to please come up on stage and present our speakers with mementos. We thank them for coming here and sharing their views with the audience on this important issue of sustainability and sustainability reporting. I request you to please present a memento to our moderator, Mr. Narayan Vaidyanathan. A memento for Dr. Rajendra P. Srivastav. A memento for CA Dr. Avinash Chandar. Memento for Mr. Gaurav Swarup. Radhe. Right, and a memento for Ms. Namrata Rana. I request everyone to please gather for a group photograph. And I request the ASSOCHAM team also to come up on stage for a group photograph.
Thank you so much.
With that, we come to the end of the Global Summit on Responsible Corporate Governance and Sustainability Reporting. Cross-border trends and critical issues in accounting and assurance. It's been a very informative and productive day today. Lots of important issues discussed, and I'm sure a lot of insights have been retained by the audience on governance and ESG. We would like to thank our partners for their support, ACCA and Taxman, and I request all of you to join us for lunch.